we go.
Hello everyone, this is John with Money on the Floor Currency Trader, and I wanted to show off our new template for the prop passing course that we had just put out. That's all now in video format, and it comes with a system. This is the system. This is what I've come up for day trading. It's not for scalping. I mean, you can use it, you have to go down to a smaller time frame. We're already on a 5-minute chart, and it's still for day trading. So what I'm looking for is a trade to take me all day. Usually I start out on the 15-minute chart, excuse me. Let's bump back and you'll see it right here. And I'm looking for one trade in Tokyo. So we had one little trade here that went up, but it was red at the bottom. You can't see I'm in the way, but let's get myself out of the way. It's red at the bottom, so there is no trade at that point. There is a trade right here though. This one came up and that was a very good trade. And then it told you to get out at the top right there. So it worked out really well. You took it up, you went up, you got out. Now it did make an M pattern. And when I remember trading this, I did trade it back down and I did quite well on the little move down. The problem is, even with my own system, I was so focused on just trading, I tried to trade through the junk. And I gave back almost all the money I made in here. The idea is, even me, I have to listen to my own system. And it's hard sometimes because human nature, we want to trade. But the idea is you only want to trade one trade in Tokyo. You only want to trade one trade in London, one trade in New York. If you can do that, you'll be very well off, because what happens is the market moves up, then it goes sideways. The market moves down, then it goes sideways. So it has a momentum move up, and then you're going to get these areas of sidewaysness right there. You're going to see them. Whoop, I do not want to do that right now. Thank you. Let me see that I still got it. Another area of sidewaysness right there. And actually this one continued on all the way till over here where you got the first trade in London. You can see now why you want to stay out of this area. First trade of London went up, made you lots of money. It came back down, you would exit right there. You probably didn't make much money on this trade, but you didn't lose much either. So you took a chance. That's part of trading. So you made money on this one. You didn't make much on this one, but you made a killing on this one in New York. So, and that's how it's supposed to work. Now in New York, we were trading it earlier to do, but I wasn't on this template. I was using a different template, and the template had we had drawn structure on it because we had structure right here, and we didn't want to take off until we got above this structure. So we had put in this structure here. Get it up to go right, there we go, something like that. And we didn't want to take the trade till we got above that structure, but we missed out on a lot of the trades. So no longer will I do that. I'm not going to worry about the structure. We can draw it, but we're going to trade on into it because that's what the trading says. So I made a little bit of a mistake, and that, well, not mistake, it's all part of learning. This is still new to me, this template too. I'm more of a scalper, but I'm trying to learn to day trade, because for futures it's best to get in and get out on that, on your, whether it's New York, London, or Tokyo, and get out and be done with that. The idea is make your money and stay out, because when the market goes sideways, you cannot make money. It's not possible. All you're going to lose. That's where they take your money. Now, if it's a big enough consolidation, yes, you can trade it back and forth, and that's great, but only if it's a big enough consolidation. The idea is we do need to be careful in that. So if you're a break-even trader or you're a losing trader, it's because you might be making a little bit of money, but you're giving it back here, you're giving it back here, you're giving it back here, you're giving it back there. Anywhere it's sideways, you're giving it back. So this template, if we stay just to the template, we're only looking for buys. It's pretty obvious. It says long, even it gives you a word over there. And now, is it only work for buys? No, it's not true. If we go back in time, we can see the sells. We had a great sell right here. Went on down, went sideways. I'd probably exit this time. Remember, we just want to stay within that time. And then we had another one. This was Tokyo opening up. And there's your sell right there coming on down. You would exit at that time and be done. I mean, it did go down more, but it's not worth messing with that sideways move. You're going to take a chance of making a mistake. So take your money, get down, and be done. It did go pull up and go down again, but it really was at the same place where it was before. It never really went much slower except for right there. You're taking a lot of chances for just a little bit of money. Let this come down, take your money, be done. Let the sideways move happen. Now here, we're only looking for sells. So here all we got, buy, buy, buy. Consolidation, terrible. There's our first sell for London. That's all we got was that little bit. It came down. We got the bomb. We got out. So we were done. And then for New York, we had one sell, and that sell just kept on going. That was the trade that just kept giving. So that was great. Now it did have big pullbacks up. So the idea is you need to go down exit the trade on the bottom, let it pull back up, like this one here. This is where we started. Go down here, exit on the bottom, right in here, it pulled back up. Said it was going back down again. You could trade it back down, exit on the bottom, pulled back up, trade it back down, exit down lower if you wanted to, or just take the one trade down and been done. You would have traded it down, pulled back up, your stop's up in here, came all the way back down, maybe exit down here. It's pretty tough. Now anytime the market pulls back on me and I get my account negative, my stop is right above, right in here. So what it is I'm going to go ahead and add another trade once that starts to pull back down. So now I got 2 contracts coming down. I will make a lot more money. So if the market's going to come after me, but I only add to my positions when they're negative when I'm trading futures. So that's the whole reason, because it moves you around. You only get 1 trade in futures. So if you're positive and you add to it, it's not helping you. You're actually moving backwards. You're taking away, losing some of your profits. It's not a good thing. You're better off adding to it only when you're negative. So then after that, I would have got in and I would have got out, pulled back up. If I got in here, I would have traded that back down, and maybe it pulled up again. I added another contract and went down with 2 again. It's possible. So I might have done all that. It's very possible with New York, but I'd like just to get 1 trade down and be done in New York, and you're done. Sometimes there's a second trade coming down here. You never know. But like you can see, it works very well. So we can even go back and look at another. We don't really have the other sessions back here. But if we just look at the arrows, you can see the arrows. Told you to get in, came down here, told you to get out. So you made a little bit, but it never really went any lower than that. So you're better off getting out right at the beginning. Don't try to think you're going to get more money. You're probably going to end up with less money. Then here's another trade coming down. I don't see a bomb on the bottom. Oh, we got a bomb down here. So it came down, started going sideways, gave you a double bottom. I would have been thinking about exiting anyway, but there's your bomb. There you can go and get out. Now, if you wait for everything to change colors, you're actually losing more money. So you want to get out as soon as possible. So that's the whole key with that. Hopefully this helps. Hopefully you understand the template and our methodology. We're here to make money, and we're always in the trade room trading. So if you want to trade a group of traders where we're all trading the same way, only trading gold, only trading in one direction, hopefully. And if you're not, you're probably losing money. So that's the problem. So think about it. Join the trade room, or if not, at least get our prop firm class where you can get the videos. You'll get the software, and then once you purchase it, after you watched all the videos and you're ready, I can do a one-on-one with you just to help you out to make sure you got everything down. And if you have any questions, I love to help traders, so it's not a problem. I don't mind throwing that in. So remember, for $150 for the prop videos, there's 4 videos. It gives you everything you need to know about trading prop firms. Plus, you get me for an hour to come in and make sure you got it all down. And after that, you might even want to trade the trade room with me, so we can pass the prop firm together. That's the idea. All right, everybody. Thank you so much. Let's make money in the markets, and I hope to see you all soon. Bye-bye.